Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. All right, my guest this segment, Nick Santiago, President and CEO of In the Money Stocks. Nick, welcome back to the show.
Great to be back, Michael. Thank you for having me.
You're welcome, man. Nice job last week, knocking it out of the park on the forecast. You want to start with the GDX today?
Yeah, I wanted to start with the GDX because we talked about that getting a short-term bounce, and it looks like it's done exactly what we thought there, and a good little level. I think traders now, if anybody did happen to get in there, just trail your stop loss and see if this thing can make a move up towards that $49 level. That would probably be the next target on this thing. It's trading right now at $47.35. So I think it has a legitimate shot at the $49 level.
Okay. All right. That sounds good. The next one that you were talking about last week, this was a really good one, Apple.
Yeah, Apple pretty much caught a bid on Friday. A nice little reversal, nice little bottoming tail on volume, little follow-through. Today the stock's taking a little bit of a breather from yesterday's big advance, but that's normal. Also into the 20-day moving average. This one has some more upside potential as well, maybe into the 580, possibly even the 605 level. So I think traders, if you happen to get in down there, we talked about it on your show, you just ride this thing out, move your stops up into the money, and look for a little bit higher. I think we have a legitimate shot, 582, and even as high as 605. I wouldn't rule that out.
Okay, well, that's a nice range. Give me from the low, the day after you called the low, give the low range to today's high. What was that range?
We're basically looking at about close to 70 points. So the range was actually even a little bit higher, I think, with the stock. Traded as low as 505, 506, and today the stock was trading around 571, 572. So it's basically 60 points, 65 points.
Nice.
Yeah, pretty quick, too. So that's even better when you don't have to wait around for it too long.
Okay, so a little bit higher on this thing. Not done yet.
No, I don't think it's done yet. I think you had a pretty significant close yesterday, backed up by some pretty good volume. And, the 20 moving average was tagged today. So that was the reason for the stock backing off a little bit. But, you have a nice level at 382. I mean, it's talking to us there. And then if it can get through there with any kind of momentum, and you have the light holiday action right now, I mean, seasonality trends are in the bullish camp right here. So I think you got a shot at that 605 level. I wouldn't rule that out at all.
Okay, what about the banks? Let's say J.P. Morgan.
Well, we talked a little bit about JPM, and I said that they were still showing some strength to me, and JPM's had a nice bounce off the 200-day moving average, which we talked about actually on your show. So last Thursday we talked about this stock trading down into that 200 and holding it, and you've got a nice bounce. This is another one that's bounced up towards that 20 and the 50 MA on the daily chart. Got a little bit deflected there. Stock's still positive today, but again, I just don't see the downside in JPM at the moment. So, I'm not saying it's going to go a lot higher from here, but as long as those financials hold up, the markets are still hanging in there. They're not great. They're not in great shape. 2013, I'm going to have an entirely different view as I do today. But right now, for what it's worth, they're holding up.
Okay, so I'm getting the feeling it's just on a daily chart. It's bouncing between the 200 and the 50. It just kind of looks like that's its range so far.
Yeah, I mean, it actually could go a little bit higher. We couldn't rule out a move maybe into the $42 level. That's a pretty significant area, 42 to 42.50. I'm not sure it's going to get much higher than that. I don't expect that, but I just don't see this thing looking that dire. Right now, if you get maybe a little fiscal cliff news or whatever that news may be, but the technical pattern is still okay on JPM. It's still holding up. I'm not a raging bull on these financials by any means, Michael. You know that. I always look for the first chance I could short anything. But right now, they're hanging in there. They're holding up, and this is a good market barometer.
And those are good targets to keep an eye on. Okay, what about the TLT interest rates?
Yeah, well, TLT, we talked about it on your show on Thursday, actually, and that's where I wanted to bring it up. I get a lot of emails from your listeners about this. And like I said, I wouldn't expect much more upside unless it based. And sure enough, today you see the TLT is trading lower by $1.09 to around the 124.50 level. Again, this is a range-bound trade from 127 all the way down to 120. I think that's the range we're going to be in. I didn't think there was any more upside in it, and it's pulling back. If it pulls back a little bit more, we probably will get some money going into stocks, although I don't think it's going to be all that long-lived. But The TLT right now is very range bound between 127 and 120. Traders, if it gets down to 120, they could pick it up on the long side there. I think we'll have it will have a bounce at that level.
Okay, again, another market you gave everybody a day's warning and called the top on it exactly to the day. All right, Google.
Yeah, Google was another one. I think we talked about it briefly. I think I did a second part of your show last week unexpectedly. So I think we did talk a little bit about Google, about that 200-day moving average being tagged. It was a big level around 640, and that's another one that has had a nice bounce. It's not a huge bounce, but nonetheless, it's about 30 points, and you can't sneeze at that stuff. 30 points here, 30 points there, even though it's a big stock, it's still money. And nonetheless, that was another nice little bounce. Right now, Google's struggling a little bit, but I think the stock, if it could make a base, it has a chance to go a little bit higher in the near term, at least through the month of December.
Okay, so are you seeing resistance at what level again?
Well, you have a little resistance even right here where it is around 670, but maybe even 680. But after that, the stock, I think it could. I wouldn't rule out a little retrace potentially up to the $700 area. I think it has that potential, and if you get any kind of a positive event coming out of Washington, everything will get a little bit more of a bid. So I wouldn't rule out a move up to 705 or something like that.
Okay, all right,
right in that vicinity.
All right, Nick, I want everybody to know you're 5 for 5 on these markets that you talked about today.
Once in a while I get lucky, Michael.
Okay. Okay. All right. Well, let's change the subject a little bit because I understand you want to talk about high-frequency trading.
Yes, I do want to speak a little bit about high-frequency trading because I'm getting a flood of emails from people saying, Nick, well, how can we trade if there's high-frequency trading? I think there's been high-frequency trading for years now. It hasn't seemed to have affected myself or anybody at In the Money Stocks. In fact, our methods prefer high-frequency trading to some respect, to some regard. So when a pattern forms on the charts, we're actually counting and looking at time so specifically that we believe that specific point in time and price is going to make the difference in the trade. And I actually think high-frequency trading may actually benefit my style of trading.
It does. I can see that it does because at the apex of the turning points, it creates more liquidity for you. It's not running up and then all of a sudden the bid and the ask are so far away from reality, you get hurt on the entrance or the exit.
It really does. And, I've been trading for 20 years. And since I really adopted the style that I use today, this high-frequency trading has only benefited me. So when people ask me, should they outlaw high-frequency trading? Should they get rid of it? I really don't see the adverse effect of it. So I say no. I say it adds liquidity to the market. And for my style of trading, it really is beneficial.
Well, if I can throw my 2 cents in here on this one, it's not the high-frequency trading that's really the problem. It's the lack of the public participation that's the issue. If we have more people in the market, the high-frequency trading wouldn't be so obvious. It would blend in with the rest of the world's participation.
I agree 100% with you.
So that's what to change that dynamic. The industry Goliaths, whether it's a New York Stock Exchange, the Chicago Mercantile Exchange, or whoever it is, they need to ramp up the campaign of confidence and bring the public back to the market. Otherwise, they're just, they're going to end up eating their own arm just to stay alive.
Absolutely. And I think that so many people have been turned off over the years with these mini flash crashes or even the May 6, 2010 flash crash. You also have so much going on in the marketplace when it comes to, some of these shiesty deals that go on and things like that. There's so many black eyes for the stock market, but in my opinion, it's still one of the greatest places to make money.
It's the last place of laissez-faire capitalism, and there's nobody can refute that. All right, we're out of time. I want to ask you about the stock market, so I got less than a minute. Give me your impression of what's going to happen next.
Well, I think right now, we've had a good move. I wouldn't rule out some turbulence. I think from day to day, you're going to get a little bit of turbulent news out there that could move the markets a little bit. But we're seasonality. We're now into the end of the year, and I think traders, if you get any kind of a pullback and it gives you a bullish setup, I think you probably can own the market for a few weeks.
All right. Last but not least, any events coming up we need to know about?
We always have something. Right now, we don't have a date yet on our next In the Money Stocks methodology webinar, but we did hold one this past Saturday. The date will be posted, I think, this evening. So traders come over to InTheMoneyStocks.com. You can check out, go on to education. You can see our next event.
All right. Thanks so much, Nick. We'll talk to you soon.
Thank you, Michael. Have a great day.
You too. Nick Santiago, President and CEO, In the Money Stocks, InTheMoneyStocks.com. Ladies and gentlemen, this guy's 5 for 5 of what day the market turns. And you heard it here last week when he was on the show. All right, up next.